right, let's get started. Good morning, good afternoon, and good evening. I'm Diana, and I'm the head of research and sustainability at the Global Blockchain Business Council. It's my pleasure today to welcome you to the GBBC's Virtual Members Forum on introducing the Canton Network and its practical use cases for tokenization. We are a bi-weekly webinar showcasing the innovative work of our members around the world. Today, we are joined by Simon Letort, Director of Strategic Initiatives at Digital Asset. GBBC member Digital Asset is a software company that modernizes legacy financial systems with DAML, Digital Assets Smart Contract Language, and Canton, Digital Assets Privacy-Enabled Blockchain. Together, this platform powers cutting-edge blockchain solutions, helping customers unlock new networks of value with sophisticated applications. Leading financial services, insurance, and healthcare organizations are partnering with Digital Asset to create new multi-party applications that transform disparate silos into synchronized networks. The Canton Network, launched by Digital Asset and prominent market leaders, is a privacy-enabled, interoperable blockchain network tailored for institutional assets. By bridging previously isolated financial systems, Canton facilitates synchronized and secure transactions across platforms, allowing institutions to introduce innovative offerings while optimizing efficiency and risk management. Briefly now, before we begin, I'd like to also introduce Simon. Simon Letort is the Director of Strategic Initiatives at Digital Asset. Simon coordinates strategic programs designed to implement Digital Asset's vision of building the next generation of interconnected applications. He currently focuses on building the Canton Network blockchain. Prior to Digital Asset, Simon spent 20 years at Société Générale, working in global markets. He was most recently Chief Digital Officer and Head of Innovation for the Americas. Earlier in his career, Simon served as Head of Sales and Trading for Société Générale in Brazil, in Sao Paulo, as well as Financial Engineering for the Americas in New York. During this session, Simon will introduce the Canton Network as an ecosystem for regulated assets, explain what practical use cases exist, and how market participants are working together to build the future of financial services. We welcome your questions at any point during today's presentation. Please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So that being said, thank you, Simon, for joining us today. I will now hand things over to you to begin.
Thank you very much, Diana. Great introductions. Thanks for the kind words, and thanks GBBC to having us today. Nice to meet you all virtually. As I said, I'm Simon. I'm gonna present you today the Canton Network and specifically focus on application on the tokenization side. So let's get right in. Canton is something that Digital Asset and its partner have been working on for over 5 years. We recently announced the network, but really it's a work that started many years ago, which is kind of unique. We started to build the application first, kind of sub-network first, and then we are now interconnecting this sub-application together, launching Canton Network. A few names about that are our partners include several banks like Goldman Sachs, HSBC, BNP, stock exchanges or derivatives exchanges like CBOE or Deutsche Börse, but also tech provider to the financial industry, such as Broadridge, Moody's, Equilen, for instance. I'll start with a short video to kind of give you an introduction about what is Canton Network and how we.
Those who carry the weight of our world's financial systems, who have been eyeing the promise of a better way to do business, bear the responsibility of having to say no all too often. No, decentralization doesn't remove my need to be compliant. No, complete transparency doesn't protect our customers' data. No, interoperability can't require forfeiting control. And the truth is, until now, the no's have been right. But to us, saying no wasn't the end of innovation. It was the inspiration for a better solution. So, we designed a network the largest financial institutions in the world can finally say yes to. A network on which we can build the fundamental connections that create new value. Connections established by need and utility. Connections that forge new synchronized and seamless economies. And connections that catalyze significant, undeniable change. Connections that, to be clear, have been impossible. Until now. That's the Canton Network. Canton, the exponential power of connection. Those who carry the weight of...
So this little video is trying to show that we are fairly unique as a blockchain, and these slides with business stats on the left and then kind of technical feature on the right goes deeper into why Canton is so unique. It's unique first in terms of adoption. I started by saying we started by building the application first and then launching the network. This allows us to be already very well adopted at launch. 9 of the 10 largest investment banks in the world are directly or indirectly connected to Canton already. Second statistics is that we are already trading through our partner Broadridge $1.5 trillion of US Treasury repo per month on Canton. This is I think twice the volume of the largest crypto token that exists. I think Tether trades 700 billion a month. And the third stats is that another client, Versana, which is a joint venture with JP Morgan, Bank of America, Citibank, and 5 other banks on the syndicated loan market, has launched a year ago, and they already have moved on chain over $900 billion of USD syndicated loans through 1,500 transactions. So Canton is really focused on institutional use cases and is already in production for several markets with great adoption. And I think that's a key difference versus many other networks that kind of launch a white paper and then hope that some applications are going to be built on it. It took us 5+ years to get to production with financial institutions. So we think we do have kind of a head start of many years compared to other chains that are not yet in production with institutions. And the consequences on the right, like we had to design a protocol that is fairly specific to address the needs of institutional clients. First, every application on Canton is sovereign, meaning that they control the granular permissions, who can access the application, what kind of data can be accessed. There's real privacy at the smart contract level, at the transaction level, which is something financial institutions, which are our main clients, really require. And this is something that you don't really find on any other chain. Another key element related to the fact that every application is kind of independent is that the scalability is horizontal. Like on internet, you can add compute power for a specific application, and also another application doesn't impact your application. You may remember on Ethereum, there was a CryptoKitty event, which is that this CryptoKitty application got so popular that it halted the entire network. On most other blockchains, there's only kind of one global computing power, and that is shared by all the application. And if you think about, let's say, the settlement of a financial transaction, that cannot be halted or postponed because someone is buying a nice cat. So on Canton, our clients are in charge of their own application and own throughputs, which means that they can scale according to their needs. And the last point on that smart contract composability is key, is that even though you have kind of sub-networks that are independent, the protocol allows composability, interconnection between the various sub-networks. This is a key feature that of course is required to have some benefit of the blockchain. We do allow composability between various applications while keeping privacy and independence possible. So these are the main business and technical differentiator of Canton versus any other chain in the world. Now going to the tokenization use cases that are in production on Canton. I'll mention 6 of them, and then I'll give you a picture of the entire ecosystem. I'll start with Broadridge. Broadridge has been in production with its DLR, distributed ledger repo application, for several years. So they've taken derivatives transaction, US Treasury repurchase agreements, and have tokenized them. They are processing over, I said before, $1.5 billion of notional per month. And these transactions are done between the biggest broker dealer in the world and asset managers. This is really to manage the treasury, the cash of banks overnight. The interest of using blockchain there is that the operational process on repo is fairly cumbersome. You need to lock some treasuries at your custodian. And what has been done by moving the smart contract on the blockchain, it allows that locking of collateral to be done programmatically. And so the benefits are significant in terms of cost saving for every participant of the Broadridge DLR ecosystem. A second example of a tokenization application that is running on Canton is Goldman Sachs DApp, digital asset platform. It's Goldman tokenization platform for securities for multiple type of assets, whether it's bond, funds, or potentially even other asset classes. They've been in production for over a year. They've done trades in Asia, in Europe, and are working on trades in the US that should be coming out soon. This is really a very impressive development that has been leveraging our open source stack called Daml Finance. So that's for securities tokenization. The third one is Versana. It's on the syndicated loan type of market. An industry consortium was formed. I mentioned it initially by JP Morgan, Citibank, and Bank of America, are the 3 initial consortium members, but it quickly expanded to add 5 more banks. I think Barclays, Nomura, UBS, US banks, and several others. It was formed a year ago. They went into production a year ago. It was probably from 2 years ago. They developed the product over 1 year. And after 1 year into production, as I said before, they have $900 billion of loans on chain, and they really facilitate the sharing of data regarding on syndicated loans. As an anecdote, I think one of the bank mentioned that they were still sending hundreds of thousands of faxes when they were closing syndicated loans, because the business is that you have an agent bank that is leading the syndicate, and then they inform maybe 50 or 100 lenders of their share of the loan that has been closed. And in some cases, basic messaging processes such as faxes are still used. And so they decided to move the information on chain as a smart contract representing the loan. And now this information is distributed between the agent bank to the various lenders through blockchain and smart contracts. I think this is really interesting. First, it addresses, of course, an inefficiency in communication and a high workload on the reconciliation side. But it opens up perspective of, now that you have the loan information on chain, you could imagine to have the securitization process of these loans. Then when the loan becomes a CLO, that could be also taken on chain and start to digitize the entire securitization chain of the loan market. A fourth example is in Germany with the Deutsche Börse Group. Deutsche Börse has tokenized a structured product. And in Germany, the retail structured product market is very active. You have, I think, some issuer have over 100,000 or maybe 200,000 securities issued at a given time. And the issuance process used to be fairly cumbersome. It was taking probably like almost a week to issue a specific structured product. They've taken that on chain and are using now a smart contract to represent the structured product. And the issuance are done in a few minutes now. I think the volume is really ramping up. We're getting close to 50 to 100 issuance per day. And they recently issued, I think, a $3 billion bond on D7, which is very, to my knowledge, one of the largest digital bonds ever. Similarly, HSBC Orion is a tokenization platform from HSBC, very similar to Goldman Sachs DApp, tokenizing securities such as bond and funds. Something interesting is that they were the first one to issue a pound-denominated digital bond for the European Investment Bank. And the last one I want to mention is the Hong Kong Stock Exchange, HKEX. They recently went into production with their Synapse product. And this blockchain-based application allows to have kind of a T0 settlement between Hong Kong and mainland China on the equity side. So the mainland China requires investors to provide information in T0, and blockchain was identified as a solution to kind of send and reconcile the information in the same day in T0. And I think just after launching the product, one of the first client on HKEX Synapse was Citibank. So which kind of shows not only the fact that the product was able to launch, but also like very significant institutional players are quickly adopting the solution. So these were like 6 highlights of tokenization application that run on Canton. Now I'm going to give you the full picture or fuller picture of the entire Canton network. You will see on the left many of the tokenization products that I'm going to add that recently we had Nova Prime launching mortgages, US dollar mortgages on Canton, and they were securitized with Freddie Mac and I think Fannie Mae, which is the second largest mortgage agency in the US, is in the pipeline. We also have some commodity players. Iliox is a consortium of several natural gas players like Shell, Mercuria, Koch Industry, and they've been tokenizing physical nat gas and the distribution of these commodities through pipelines. So to show that the network is growing in terms of asset classes that are covered, starting from the traditional securities, bonds, funds, to structured products, to emerging markets such as China or mortgages or loans. So we are very happy with the breadth of coverage of asset on Canton Network. And again, in production with real volume between large institutional players. And that's, I think it's a very unique feature of our network. In the middle of that chart, we have the more like the derivatives products. So repo that I mentioned with Broadridge, but also securities lending when you lend or borrow some equities with Equilend. These are applications running on Daml and Canton that tokenize derivatives contract. And to the right are the cash and payment use cases. These are in light blue because they're more like in development. It's taking longer, of course, to get regulatory approval to launch cash or bank deposits using blockchain as a registry. But I want to highlight that Canton and Daml were the technology used by 2 very large pilots, both in the UK and in the US with the RLN, Regulated Liability Network, where in the UK, the Bank of England and in the US, the Fed are kind of central to the project, where tokenized bank deposits are exchanged through either the Fed or the Bank of England. Though this is to give the full picture of Canton, and I'll be happy to take questions now.
All right. Thank you so much, Simon. We really appreciate you sharing your insights about the Canton Network, tokenization, and its applications, and really the network you've already built. That's very, very impressive. Again, I'm Diana, Head of Research and Sustainability at GBBC, and we're going to take questions now. So the first one that I have is, what are the next steps for Canton Network?
Oh, yeah. So we are very happy with the current application that are running on Canton. And as I said, they are kind of sub-networks and they have their own business value. But the next step is to interconnect these applications together. So for instance, you could imagine that an asset, let's say a bond or a fund issued on one of these tokenization platform, HSBC or Goldman Sachs ones, could be refinanced through a repo transaction on the Broadridge application, on the Broadridge ecosystem. So really the next step is interconnected this application to drive value for the common client of these various applications. I used to work at Société Générale. It's public. SocGen is a client of Broadridge DLR, and also SocGen was involved in the Goldman Sachs transactions. So that could be a very concrete example where a bank is using various applications on Canton and wants to optimize, let's say, its collateral or financing needs. And this is what we're launching this year with Canton Network. Canton Network allows this interconnection of various applications. We went from a development phase early this year to testnet, to a test phase in July. We're running a pilot, doing simulated transaction this year end, and we plan to move into production for the Canton Network, this interconnection of application early next year.
Great. What is the role, can you explain, of digital asset with respect to Canton Network?
Yeah, so digital asset is the technology provider of the network. If you take the analogy of Ethereum, consensus is the main contributor to the Ethereum code base. So digital asset is the main contributor to the Canton protocol code base. But the network is open. Anyone can contribute. And it's also run in a decentralized way, meaning that the people validating the transaction are not just digital assets. There's a consortium or collective of validators that are running nodes to allow for a decentralized way of validating transaction that are crossing Canton Network. So if you have two applications connected through Canton Network, they're going to rely on a decentralized group of validators to process these transactions. And digital asset is a tech provider for this technology.
Very interesting. Now let's start with talking about the benefits. What are some of the savings or efficiencies of using Canton Network? Do you have any statistics, any numbers on results?
So the first statistic that I would give are at the sub-network level. For instance, I know Broadridge has been communicating on the fact that using DLT technology versus traditional Rails for repo is kind of reducing by two, dividing by two the ops cost of doing repos, and running the repo operation is usually like a multi-million-dollar cost. So the benefit of using Broadridge DLR are in the multi-million-dollar per year of savings. So that's one. Also, the benefit are often quantified in terms of time. I mentioned D7 in Germany brings the issuance time from days to minutes. I think similarly on the syndicated loans, the average time to close a loan is like 20 plus days. That is also brought down significantly. So there's a saving in time, which is of course a significant amount of money. Similar thing for the mortgage activities. Reducing the time of issuing your mortgage means you can reduce the time you need for warehousing that mortgage before securitization. So you see some saving on the refinancing cost or warehousing cost there. So that's kind of at the subnet level. Now, when it comes to interoperability between applications, and you go through Canton Network, let's say to move assets, we are just in test, so we don't have actual production figures yet. But I expect, for instance, on the collateral management to see some significant benefit. So if you have an asset and you want to use it to cover a margin call, currently you have to do that kind of on an overnight or daily basis. Going intraday is something that is not doable from an operational point of view. If you now have tokenized collateral and you can programmatically move that collateral, you could imagine to move that collateral every hour, for instance. And this reduces your risks. Your counterparty risk in particular is drastically reduced. I used to be a quant in risk, so the shape of your risk is usually like in a square root of time, and if you have like an 8-hour or 24-hour time between margin calls, and you bring that to like a 1 hour, because it's a square root of 24, it's probably like a division of 4 of your risk. So I would say that you can divide your counterparty risk by 4 by using blockchain for managing collateral, thanks to crossing these assets through Canton Network.
Wow, that's very impressive. Building off of that, can you explain to us a little bit more the business model of Canton? Fees per transaction, anything else? Is it like a Red Hat model? Let us know.
Yeah, Red Hat is a very good comparison, actually. Yes, so we provide the tech stack as a technology firm, open source, so no cost, but enterprise company like Linux, but many enterprise do want like enterprise support, and they purchase for Linux like Red Hat support. Same thing with digital asset, they purchase what we call Demo Enterprise, which is a version of the code that has more features and in particular enterprise support. So the business model for digital asset is very similar to Red Hat. I think it's great comparison. Open source software, which is a basic platform with an enterprise version that has more feature around high availability, disaster recovery, performance, and also enterprise support. So that's a business model of digital asset. Now, I think there's a second part of your question, which is what is the business model of Canton Network? And so Canton Network, again, when it's going to go to production, as of now, it's in test, so there's no cost to run transaction in test, but in production, the business model that is envisaged is not to have a gas fee like on Ethereum, where you don't know exactly how much it's going to cost you today or in the future, because that fee varies. The plan for Canton Network is to have a fee which is fixed in dollar, and the collective group of validators of Canton Network have to kind of agree on what that fee should be. This is not yet completely defined, but what's defined, it's going to be a fixed fee in dollar for a given message size, to give visibility and predictability to our client who require that.
Now talk about the tech trend to disintermediate financial services in many ways, especially with blockchain and peer-to-peer interactions. You're talking about, you mentioned Broadridge as one of your critical partners, and Broadridge is essentially an intermediary in financial services. Does Canton potentially disintermediate other intermediaries, and how would that work?
Yes, it's not really to us as tech provider to decide. Like it's interesting to see how our clients have kind of different vision. Some are more, I would call it maximalist, where there would be more disintermediation, and some are more traditional and saying we're gonna more digitize and keep the same number of intermediaries. I personally don't have a view. What I notice is that it's not only a tech decision. You sometimes need to have a custodian for regulatory reason, or also from difficulty to transform the industry, like the strengths of the incumbents and their existing network of relations and clients is pretty strong. So as a firm, we tend to be more closely aligned with incumbents, and as you can see in the use case I showed, we are kind of replicating the same number of steps when you do a transaction, but we are doing that on a more digitized fashion, which makes it more efficient. But I haven't seen yet major disintermediation because of blockchain, not because the tech could not allow for that, but because the market seems to be interested in keeping the same number of intermediaries for the moment.
Okay. What about players that are interested in getting involved? Is it a low or high barrier to entry, would you consider it? Is there a CapEx investment for getting involved?
So I'll say yes and no. from a tech point of view, I said there's an open source version. It's relatively easy to adopt. It's the code base is fairly simple. So one could say, no, anyone can give it a shot. From a more business adoption point of view, disrupting financial markets has a high barrier to entry, which is not a tech one again. It's more like a go-to-market issue. The need to onboard and be adopted with various key clients is difficult. And that goes back to the fact that it took digital asset like 5+ years to be onboarded by the names I mentioned. Like you don't become Goldman or Deutsche Börse or HSBC tech provider overnight. The same way you don't become the new custodian or the new exchange or the new tech provider for a given asset manager. So I think the barrier to entry of financial services is pretty high. And I think digital asset and Canton has been able to get over that barrier, which is, let's say, an advantage for us.
Great. What about someone interested in listing their token on the network? Should they contact you? What steps should they take?
Yes, they can contact us and they can build their own tokenization platform so that they can list their token on Canton. An alternative, they can also contact us, but we'll introduce them to our partners that have already built this platform so that they could leverage an existing platform. So depending on the type of asset, we could recommend different clients of us. So security, I mentioned a few names. If it's a mortgage, if it's a loan, then we have different players. If it's a new asset class, then that could be something that could be built, or even if it's an existing asset class, but for some reason that player wants to build its own, that's also possible.
Now, moving to the other side of the coin on regulation, sometimes there are concerns around regulation. How do you navigate those concerns?
Yes, that's a major one. When you look in production, like the tech part is not the main work. Usually the main effort is on legal compliance, procedures and controls. So we have worked with our clients to have a tech stack that allow our clients to comply with their existing requirements. So we have seen in practice that our clients who are regulated institutions, depending on their sector, if they issue securities, it's by the SEC, if they do derivatives or banking activities, maybe with the Fed or the CFTC. But regardless of their regulators, the framework of control is often the same one, like tech risk control, anti-money laundering control, reporting, operational risk controls, cybersecurity controls. And that's why our tech stack has been built the way it is, by giving the person that operates the application sovereignty over its application straight to the regulator, to that the right controls are in place. So I'm not saying it's easy, but I think it's probably easier to get to production using Canton versus using like a public permissionless chain where you have a very high, it's very difficult or even impossible to comply with the existing rules when you have a permissionless public chain. Where on Canton, it's an open permission chain. And so you can specify some kind of data privacy operational requirement in terms of who validates the transaction that allows you to comply with existing rules in most jurisdictions. We've proven in Asia, Europe, US on securities, derivatives, fund markets that this is not being blocked by regulators.
Great. Now, final question for today. I wish we had more time, but what would be the first step in joining the ecosystem for someone who's in a jurisdiction where Canton is not present to start using Canton?
Yeah. It's a protocol like internet, so there's no jurisdiction per se to comply with. But I would say the first step is, yeah, reach out to me. I'm kind of on the business development side, and these are the questions that I love to try to answer with our prospect or clients. So yeah, reach out to me either directly, or we have a website, Canton Network, where you can say, okay, I'm interested, and we'll make sure to contact you there. So yeah, I would say reach out.
Yeah. And for any further questions that we received, I think folks can contact you. And once again, thank you so much to Simon and Digital Asset for joining us today for a really thoughtful and engaging presentation and Q&A on the Canton Network and the opportunities for businesses across the board. We really look forward to learning more about Digital Asset's progress. A recording of this presentation will be circulated to all those who registered, and it will also be shared publicly on GBBC's YouTube channel. Thank you again, and have a great rest of your day.
Thank you, Dan. Thank you all.